Welcome back to the channel where we talk about all things investing to keep you motivated on your path to wealth. It's your favorite investor, and today we are going to talk about how to set up your investment strategy and what that actually means. There is a ton of videos that talk about investing but never actually talk about strategies you can go and implement. Hopefully after today we help solve that problem and help you overcome some investing fears that may occur. Answers to questions like: when should you be buying stocks? How should I be allocating my cash to make sure I am not taking on too much risk? What will determine when I should sell out of stock? What is the purpose of investing? Let's get into it. So first of all, any good investment strategy has to start with your goals. What are you trying to accomplish? Are you trying to build a retirement account? Are you trying to obtain wealth relatively quick, and so are you willing to take on more risk? Are you seeking more cash flow to replace your work and eventually be able to work less? Your strategy is exclusive to you and unique. So as you ask yourself these questions, let me tell you a bit about my goals. Approaching my first decade as an investor, my goal from the beginning was to build cash flow. This pushed me towards dividend growth investing, as I want to build cash flow but don't want to neglect being a part of companies I continue to see growth in. So I also invest in growth companies as well as some higher risk companies that I keep in a separate portfolio. This allows me to attempt to pick up on trends and benefit from constant dividend payments. It's okay to chase multiple avenues, just have clear goals. Next, you have to have a consistent plan on when you will invest. Will it be monthly or weekly? It can even be a lump sum yearly. Whatever you chose, do it consistently. Your best ally is to get started in the stock market today. Dollar cost averaging has been my best friend through my investment journey. I never have doubts that I bought into high, because when prices go lower I also purchase more. They say to not time the market, and this temptation, they'll be honest, is difficult to resist. I am a victim of this myself. However, I don't believe it's a bad thing to pay attention to markets and have extra cash on the sidelines to buy when things are low. Just don't become the person that never actually buys equities. By now you should have a goal in mind and more or less of an idea on how you will enter cash into the market. Now we have to talk about which equities will you buy. For most people, buying into an S&P 500 index fund will do. This will be more than diversified enough, but you will only ever perform with the market, which is not necessarily a bad thing. Those with an appetite for more risk may choose another path. For example, earlier I said I wanted to invest into dividend growth. Using instruments such as SCHD and JEPC, I can increase my cash flow while also seeing capital appreciation. Sprinkle in some individuals' names like Apple and Amazon. Possibly some high-flying ETFs such as XLK, and possibly some riskier ones like ICLN, and you can see that I have developed a portfolio that is tailored to my risk and goals. Building cash flow and have potential growth that can possibly exceed the S&P 500. This of course is not my entire portfolio, but an example on how one might find their interest and align their portfolios to match based on their goals. Of course, no strategy is complete unless you take gains of some sort. So we have to talk about when should a person sell. This all comes down again to your goals and what the underlying future has in store. Let's say there was a certain number you wanted to hit and you wanted out of the stock market. I'd say that's a good reason to sell as long as you have a plan for the cash. Selling because you think a stock is high is usually a bad reason to sell, as it may continue to move higher, same as if the stock is on a bad losing streak. A good reason to sell may be because your stock decreased its dividends or the financial outlook of the company has changed for the worse. In most cases, if you're receiving a solid dividend and that dividend has grown to a significant amount, continuing to hold and choosing to not sell the dividend may prove to be an even better strategy. I do hope this video helped clear up some questions about creating an investment strategy and hopefully puts you on the path to starting or continuing your investment journey. Be sure to hit that like and subscribe so you don't miss out on any future investment content. As always, it's your favorite investor, and I'll catch you on the next one. Peace.